Well, I think with regards to recession risks, those have clearly risen. There's no question about that. You've got a massive tax increase. You've got massive disruption and uncertainty coming through. Obviously, that's gone up. However, we do have to remember just how strong the economic foundation was at the start of this year. What is happening now is very destructive, but it's very destructive from a strong starting point. And that means that I think if we continue with the current policies, if the taxes on US consumers stay at these levels, a recession will happen in the United States. Maybe not globally, but in the United States. But if we were to see a rapid retreat, and President Trump has retreated very rapidly on earlier tax increases, then I think you might get a downturn. There's no question the US is slowing into a weak economic situation, but you might actually avoid an outright recession.
Do you believe, and I say this because I know you've just done a piece, I think the headline was Competence Matters. Do you believe that this administration is economically incompetent?
I think the problem that we have with the administration at the moment is essentially two things, and yesterday's market moves really demonstrate this. The first is that policy is very erratic. There's no certainty about policy. You know, we saw with the taxes on Colombian imports, they were imposed, and then hours later there's a full-blown retreat, and they're all off the agenda again. So that sort of thing creates this natural level of uncertainty. And then the US system of government is now tending towards the imperial. It all depends on the views of one individual. And that means that only Trump can deny fake news rumors. And if there are credible rumors about what he might be thinking, the market will go off in a certain direction. Now, what's the problem with that? Well, one of the key problems with that is that whilst this creates volatility in financial markets, this level of uncertainty creates serious questions about longer-term investment. Do you want to build a factory in the United States if you have an erratic policy dependent on the whims of one individual? You don't have the certainty to make perhaps what is a 20, 25-year commitment. That could be a problem as we look ahead.
Paul, this is Carolyn. Always great to talk to you. Thank you so much for your time. Now, there's one school of thought that says China is the biggest beneficiary in all of this because all of a sudden China is the reliable trading partner, let's say, for the EU, of course. I know there's always the issue of, excessive dumping and exporting overcapacity, but China seems to be the better trading partner going forward. And there's no longer decoupling, but recoupling. What's your view on this?
Well, China certainly, I think, is in a position to take advantage of this, as is the EU and the UK and so on, because what we have, and I think this is important, this is not the 1930s. The 1930s, the famous 1930 Smoot-Hawley Tariff Act, started a global trade war. We don't have a global trade war. We have the US cutting off its own arm. This is an entirely US-focused situation. So the rest of the world can carry on trading. But of course, we have a big difference between China and the United States when we're talking about trading partners. That the United States has been a consumer, it's been raising its standard of living by consuming low-cost imported goods, whereas China is a producer, it runs a trade surplus. So for Europe, yes, China may be a more dependable trading partner, but it's a very different trading partner when it comes to the interactions because China is a producer, not a consumer.